comes a time in market cycles where the technicals get you into trouble. And what are the two sayings? The trend is your friend until it starts to bend, or the other one is, every new high is bullish until the last one. Um, and I think that's where we are right now in this market cycle. Is the technicals are going to get you into trouble because they are trend following and momentum. And there's so much leverage and the system right now that when this thing breaks, it's going to break very quickly, and you're going to get those 30% down drafts very quickly, and you're not going to have a chance to say, "Oh, I broke a trend line, I got to get out." So I'm paying less and less attention to technicals just right now. I believe in technicals. I use them a lot, but right now I'm not trusting them. Anyway, sorry.
Let me give you one example to I think address that, or at least, and I'm not arguing with you. I mean, everybody has to do it their own way. But I mean, here's Palantir, where frankly there was nothing bearish going on from 23 for the last 3 years. Okay, so I'm bullish from, I don't know, 8 to 200, and then the subtlety. That's not subtle. Here is where you get into problems. Now, yes, you don't catch the top. You just don't. At 207.52, I didn't have sell signals.
Yeah.
But this is where the trouble starts. You close the 200-day, the 50-day comes down through the 200, and then you watch the volume, and the volume actually isn't that egregious. But that's the change in trend. And I'm not going to kid anybody that you can pick off this. And I've just given up. There's no way to pick that top. That's why I like to sell doubles, because then I'm playing with the house money from, in this example, which I did not own, full disclosure. But, let's say you buy it at 10, you sell half of it at 20, and then you ride the rest at 207, and then you sell your first third here at 150 some odd, and then your second third at 133. That to me, you're getting most of the meat of the move.
Yeah. Actually, I want to put together both of your expertise. Can you put in BAC? It's a bank stock bouncing. Let us know. What do you think about this bounce? What's going on? Yeah.
Charlie, you've forgotten about this more than I know, and I'll come in afterwards.
Yeah. All right. Well, listen, the XLF in my mind is rolling over, and I think we had an important break in the last 2 weeks, and all we're doing is trying to, suck in the dip buyers right now. So I'm very bearish on the banks going into the spring, and trying. I have traded them because I know there's still the dip buyer mentality out there, and the fundamentals right now short term look very positive. But there's so much anticipated in these, positively anticipated in these fundamentals, and yet I see some problems on the horizon. So I'm staying short them, even in these bounces.
Here's a subtlety. J.P. Morgan, and this is literally pennies I'm talking about. So get in front of this steamroller at your own peril. But J.P. Morgan, and why anybody thinks they're going to get positive news out of a Jamie Dimon speech is beyond me. But they had their investor day. They didn't like it. They closed it below the 200-day, and now they're bouncing it on fairly feeble volume. And so that's J.P. Morgan. BAC did not violate the 200-day, but again, by pennies. So we're picking nits to an extent. But it's the same thing, low volume bounce, nothing great. And I talked on the Tuesday show, Charlie, about SEF, which shorts the XLF imperfectly. And the thing with this is the biggest name is Berkshire. So that's a bearish chart. This is the Spider XLF. I agree with you. And frankly, it's more bearish than the other two. And I've been, concerned about shorting Berkshire before because people genuflect to Warren Buffett. And I think that genuflection is coming to an end. This looks like it's getting a little bit weaker, although not terribly so.